Alright guys, welcome back to AWMFX. Good morning, good afternoon, good evening, or good night, no matter where you are. Hopefully you guys out there are doing great, earning a lot of money from the market, and of course taking great care of your health. Alright, let's forget about the pandemic. It's already over, alright? Don't think about it. So first of all, I really need to apologize. I'll do my best, okay? This is my promise. I'll do my best to create 2 to 3 videos per week, alright, for all the viewers out there. So what I have been doing recently is, of course, I'm quite busy with my second batch mentorship students. And recently, I've gave them a very heavy topic, alright? It really cracks their head and, of course, their mind too. And in order for them to understand more, I did a one-on-one class for most of them, whoever that have problems. And of course, I will give a lot, not only the weekly webinar. So during the weekdays, I'll give ad hoc webinars or class tuition, I call it tuition, to enhance or should I say to uh, solve their problems, all right? So to solve whatever the doubts they have. Right, so I'll do my best to help them out, and of course, hopefully, one day I will be able to do that to you too. So today I'm going to share with you some uh, setup, all right, kind of a good setup, All right, so before that, let me do some introduction about QML, all right. Of course, we are focusing at this blue box over here. And by the way, the haters out there, I don't mind how you think about my channel. All right, I'm going to give free education as much as possible. Even though you say that my channel is one of the worst channel regarding on the supply and demand, I don't care. All right, okay. So it won't stop me from giving other people that needs the free education. Right. So basically, first of all, of course, let's look at this structure over here. Okay, very, very simple. If you look at the whole structure, we know that the price is actually going down, right? So basically, when the price going down, we wanted to follow the trend. All right, we always talk about trend is our friend, trend is our friend. So what is the most basic way to read the trend? All right, it's of course break of structure. And the second is that the confirmation how we gonna go into this kind of trade is very, very simple. And not only I'm going to share with you a type of setup, one of my favorite. All right. So before that, let me explain a bit. So of course we know when it's downtrend is one thing. There is 2 type of QML. All right. So the first QML is when we have a structure break. All right. We have a structure break. Then the price comes back to the almost left shoulder length, and then goes down. So this is what we call it as a QM quick retest, Quasimodo quick retest. And of course, there is another type, right? Another type is that we have a Quasimodo, right, setup. Means that it's a break of structure, but however, it takes quite long time, and it will have a lot of price action in between before the price comes back to almost the left shoulder length and then drop. Right, so this is another type we call it as a late retest. And in between, we will have a lot of how should I say, price action, such like this one called what, the fake out, or maybe compression, or maybe there's a diamond setup. All right, so whatever is we'll have to see what is the type of the price action. Okay, and this QML can happen at the reversal. Right, what does it mean? Means that it can happen at the reversal, or it may happen at the trend continuous. Right, so it can happen at reversal or trend continuous. So in the example below over here is what we can see is a trend continuous. You can see properly, very clear that the price break structure goes down, break structure. But however, when the price reach back to this area, all right, came back into this area, I'm not going to explain why it reacts with this point. That is, of course, a specified a movement here, all right, which I've taught to my students for the last 2 weeks that cracks their head, all right. Important is that we must know how to label and look at the structure, okay. So first of all, you look at how the price move, okay, and we have a break of structure. You can consider this as a break of structure or this as a break of structure. It's up to you, all right, it's okay. It depends on how you define a high and a low. All right. So now we have our QML over here, right? Quasimodo level. Okay. So I have to bust the myth, all right? So a lot of people, if they do not know how to trade, they will basically go into a trade at the QM level, all right? They will go into a trade at a QM level, saying that this might be your entry, all right? And then your stop loss will be higher over here. I won't say that it's incorrect because everyone has its own way of trading. But for me, it's definitely no, no, no. I am not going to use that kind of way of trade. All right. Basically, for me, it's a no, no. All right. It's a triple no, four no. Okay. Because QML, I repeated quite a many times. QML to me is a sign of reversal. That's all. Of course, in this sense, is that it's a sign of continuous reversal. Means that you can see the price climbs back up, right? So it's a sign of reversal after it has broke the structure. So it's not an entry, right? It's not entry. And furthermore, when I have the left shoulder of QML over here, right? This is the head, the highest point. Okay, let me get this out. I'm looking at the price action, how the price comes back into the right shoulder. This gives me a lot of excitement, right? This gives me a lot of excitement because it happens to create something that I like, right? What is it? I'm going to share with you. So there is a price action, I call it a compression, right? If you know how to mark your or do your mapping of supply and demand, you can realize that there is no demand left, right? There is no demand left. Let me get it into different color, maybe green color. It's not so obvious. Purple color, I think should be a bit heavy. All right. So if you realize that there is no demand left, right? If you know how to do your mapping, there is no demand left. So giving us a sign, right, that this is a good compression, right? The only last demand left is right here. This is the only last demand left. All right. The way how I define supply and demand is a bit difficult. Not difficult, different from other people. So you need to look back some of my past video. Okay, so we have a compression. All right, we have a compression move, meaning that when the price in future when it drops, there is no resistance, or should I say there is nothing to hold the price. Okay, so I just name it CP over here, call for compression. Okay, why I'm saying that this is one of the best setup, because this movement is not only CP, it is also combined with fake out. That's why I say that this is part of a very, very good setup. So over here, we have fake out. All right, you can see that the price rejected at this point for quite a few times. All right, we have R1, R2, and R3. And before the price went up again, it created another fake out over here. Of course, this is a quite small fake out. All right, we have a R1, R2, R3. Right, in this time frame M30, you think that it doesn't look, I mean, or should I say maybe it doesn't look so obvious. Now let me switch it to small time frame. All right, just one time frame smaller. Okay, just one time frame smaller. Now isn't it more obvious? You can see things more obvious over here. You can see the rejection. All right, you can see the compression, and also you can see that over here is another liquidity fake out. So this movement over here is what we call it as a CPLQ, because the compression and the fake out creating liquidity, a lot of liquidity, means that there is a high chance the price will drop all the way, will drop very, very fast. All right. So this is the first clue for you to trade a QML leg retest. Now, let's talk about entry point. Right? I've told you that I don't believe in QML. Not to say I don't believe entry at QML. All right, I believe entry at MPL. But there is one problem. All right, along this line over here. Right, of course that not here. This is definitely out of the picture. Along this head over here, there is no clear supply zone. Right, for your entry, there is no clear supply zone. So what we usually do is that we go even to a smaller time frame to look out for a MPL. MPL stand for maximum pain level. All right? Maximum pain level, right? So we just go into this area. Okay, so from here we have a very obvious maximum pain level, okay, where the price drop and then comes back up and then make a sudden drop again. All right, so let me just go with you. This is my MPL. All right, this is my MPL. You can see that the price drop, all right, came back up before it drops to break the structure. It started to break the structure, right? The initial move to break the structure. Of course, a lot of people will argue this might be the one, all right? This is definitely not the one, because if you know how to do mapping, I told you guys, you must learn to do mapping. If you know how to do mapping, you know that the price ended over here. So it's no longer fresh. Of course, some of the non-fresh zone, there is a chance that it will be tested again. But the possibility of getting hit again is getting lesser and lesser, right? So over here, we have our MPL. This is our MPL, and it's very, very beautiful. Not only based on the movement or price that goes down and then comes back up. It consists of a lot of retests. You can see that the price retested at this zone, right? A few candle tested at this zone again, and then before the price breakthrough, it came back up just to test the zone a little bit with a double maruking before it drops. Now, we have a very, very clear entry, right? That is this zone. I always mention this. If you want to get a good entry, find the MPL, all right? MPL. Then after that, you find the supply and demand zone, all right? For this case, it's a supply zone above the MPL. If you're doing a buy trade, it's supposed to be a demand zone below the MPL, right? You get that clear, right? So what happens is that if we have all these things combined, okay, now let's go back to M30. You can see that we will have a very good entry. All right, we will have a very good entry. Sorry for that, because I've been drawing a lot. Right, so we have this MPL, we have the entry zone. Now you look at how the price react when it reached this zone. It came down fast and furious into another zone. Of course, this red zone over here, I need no need to mention that is a demand zone over there, which I have pointed out to the students for quite some times. Right, so this is what happens when the price drop. If you able to get into this trade or able to identify all the things that I've taught you, right, you may get the most out of the movement, right? You get most out of the movement. But sometimes I will advise them not to do that. I'll advise them to take their profit. If you have no confidence, just take your profit at the resist support area, right? In this case, it's a support area. So I'm not sure whether 1 to 9, right? Actually, I really widen it. It's supposed to be a little bit lower. So I do not know, maybe 1 to 12. I'm not sure whether is this enough for you or not. All right. So some of you are having bigger appetites. It may not be enough. For me, it's more than enough to grow my account. All right. So that's all for today, guys. And if you like the video that I do for you, please do give me a like and thumbs up. And of course, do subscribe to the channel to get more new videos. All right. And hit the bell button. So I'm going to see you guys then. I'm going to make some more videos to be posted in this week. All right. So see you guys then. Bye.